Good morning. Welcome to the morning market briefing. Today is June 15th, the Ides of June, and it is so far so good, I guess. Hopefully the second half of June will be better on the war front than the first half because we do have a deal, Tom. We'll talk a little bit about that. We'll also talk about bans on social media use in the UK, and then what to Warsh for the rest of the week because this is going to be Kevin Warsh's first Fed meeting as chair. So with that, Tom, I'll go through the headlines on this deal on the Strait, and then we'll talk about the consequences. So, as you might have heard over the weekend, there was a UFC fight. There was also a massive U.S. win in the World Cup, but we also did open the Strait of Hormuz, or agreed with Iran to do that. It's going to include the end of hostilities, immediate cessation of military operations on all fronts, including Lebanon, reopening of the Strait, lifting the blockade immediately, and then freedom through the Strait beginning on Friday. But it's going to take about 30 days to open, and then there's going to be no tolls for 60 days. Trump has said that the deal would be permanently toll-free, but the Iranians have said that they're going to be charging for safety, navigation, environmental, and insurance services after the 60 days. There's going to be economic relief, a waiver for Iran to sell oil during the 60 days, a phased sanction relief, including $25 billion of overseas Iranian assets, conditional and backloaded based on progress in the nuclear talks. And on that nuclear framework, there's going to be a reaffirmed commitment not to procure or develop nuclear weapons by Iran. And there's going to be negotiations on how to handle the stockpile of enriched uranium. The baseline commitment is that the uranium will be diluted on site in Iran. Is this kind of what you expected, Tom? Seems like a long time coming for something that was more or less out there maybe even a month ago.
Yeah, I mean, it's basically kind of down the line of the original 14-point deal that was announced, 60 days ago, however long it was before, once we stopped shooting and started to have a ceasefire. What's notably not in there is the potential for sort of U.S. investment. I thought there was going to be some sort of Ukrainian deal, like the rare earth metals deal, where we're going to be in there enriching, pun intended, ourselves on the rebuild, or potentially having more economic influence to maybe functionally dilute, pun intended, the current government. If you look back at the Soviet Union, you start introducing a little bit of the freedom, a little bit of capitalism, and you start to get somewhere, and that sort of ultimately led to you could argue a more free, more economically viable Russia now than in 1985, just as a result of the opening of Russia. And I think that you could kind of start moving that way with Iran, where it's not going to be what it was. It can't be as extreme because you've got foreign investment coming in and influencing that way, as opposed to just, the George W. Bush style of influencing regimes. So
this doesn't seem like the amicable end of war deal that Trump likes to do. I feel like Trump tends to like to break down and then build back, better and stronger than ever before. But even with North Korea, he had that video when he came in, this was in his first term, and had this massive 3-minute cinematic video of what North Korea could be if they worked with the U.S. and really built something special. This one, I feel like he wanted to do that because he kept talking about the investment or working together. And at the end of the day, I feel like this was not an amicable deal, as people might have guessed. And both sides are just wanting to move on.
Yeah. I think ultimately it's a small victory. If anything, what you've got is a destruction of a large portion of the uranium enrichment. You've now got oversight and dilution of what they do have. The Strait is open. They're going to have some more long-term leverage there, but not really as much as you'd think, because ultimately it hurts them more than anybody to have the oil turned off. I think in the long term, if they do a toll and they use that money to enhance the shipping there and bring down insurance costs, it actually could be a net win for the world at large in terms of oil prices. I mean, we're already seeing oil. I haven't looked in the last 30 minutes or so, but it's looking like it might break through 80 and go into the high 70s, which, I mean, that's going to be the end of your inflation talk.
Mm-hmm.
I mean, everything that we've seen come through in the last couple months is fake news housing numbers and oil inflation. So those two start to drop, and suddenly we're going to be facing rate cuts. Rates aren't reacting as strong as I thought they would, but, I mean, the 30-year is now 493. I mean, the world was going to end 3 weeks ago, and we had I guess it was 5 weeks ago now, we had the 507 30-year auction, the worst in history, allegedly. And, those people have made a lot of money since then. So, it's just, it's sort of a wet fart.
Do you think there's
not real satisfying?
Do you think there's some concern that Kevin Warsh will, and this is going a little bit out of order, that Kevin Warsh will be dovish and therefore influence longer rates higher because he's going to foment fears of inflation?
I doubt it. I think that he's going to be a realist. I think he's going to be like, hey, I'm coming in. We've obviously seen inflation take up. I don't know if he'll use the word transitory, but that's what it is. It's the complete opposite scenario of 2022. That was not transitory. That was printing trillions of dollars and handing it out to anyone and everyone, some fraudulent, some not, and just increasing the money supply like crazy. What we have seen is transitory inflation, which is we had 3 months of very high oil prices, and now we're significantly lower than that. I mean, if we break into the 70s, and we're like almost $40 lower than we were at the peak, and that's going to cause the numbers to go negative for next month, which is going to be a real drag on inflation. And then the only thing that's going to be holding that thing up is the housing number. It's going to be up on stilts because you think that travel costs are going to go up or down if jet fuel suddenly drops by 30%, heading into the summer. I mean, I think that's something to be cognizant of as well. I mean, those are the things that are driving. Healthcare, I don't know how to fix. That's one that's always going to be elevated. But, those are just the only pieces I think that are really affecting it right now. Everything else seems to be cratering.
Well, I mean, if everyone's on these GLP-1s, maybe people won't be going to surgeries. Maybe we'll have an oversupply of hospitals and surgery centers and all these places.
Yeah. Now, we've been talking a lot internally about, Quest Diagnostics or LabCorp. What are those going to look like? Because the idea, like the peptide stuff, the blood work stuff, looks to be the future. Especially, I mean, if Eli Lilly can get retatrutide out, it's going to be game on.
Yeah, you think, I mean, if you have a DEXA scan, a blood work, a metabolic workup, and a VO2 max test every 6 months and feed that through into an health AI, like, is that going to be better or worse than going into a physician's office and going to see a PA or an NP for 5 minutes and then going on your merry way every year?
I mean, if I've got a broken arm or a gunshot wound, I'll go see a doctor.
Right.
Otherwise, there's plenty of information out there, and there's plenty of, everybody knows what you need to be doing. And honestly, you can get just about any drug you want on the internet anyway.
Sticking on the Kevin Warsh angle, you're off to a conference, actually even today, on Fixed Income Leaders Summit, actually. Phil's, you're going with Ryan. What are you thinking their topics of conversation are going to be as it relates to Warsh and the path of interest rates?
I'm not sure. I don't really have an idea for what other people think. I think there's going to be a fair amount of he's just going to cut because he's Trump's lapdog. I think there's going to be a lot of talk of rates are going to spiral out of control. This is permanent inflation, and we're going to 6% on the 30-year. We heard a lot of that last year with the tariffs. And honestly, I think the idea that the war may be ended by Friday is going to throw people's slide decks off quite a bit because the narrative they probably have prepped to talk about at this conference has changed quite a bit over the weekend. So I'm not really sure. I know that, I mean, the reason I go to this conference every year is because you get an idea for how people are, you get to know what the groupthink is. You get to hear all of these big money managers say the same thing. And then you can take that information and say, is it right or is it wrong? I would argue the last year, the big narrative was that we were going to see empty shelves, we were going to see spiraling inflation, and we were going to see a 6% 30-year We didn't see any of those things. But I knew for sure after hearing them all say that was not going to be the case. And so I think that's the big takeaway for me is, can I find anyone saying something different? What is that person saying? And then what is everyone saying? And whether or not that jives with my worldview or not. That's usually how I operate in these conferences.
We did get the first reading on June data, and it's interesting what it did on prices. On prices, the May reading from the Empire State Manufacturing Index, this is something put out by the New York Fed, came in at 61 on the prices paid. That's down from 62.6 in May. And again, this is before, obviously, the news we just got over the weekend and the 6% decline in oil this morning. And we're already seeing some deceleration in terms of prices paid and prices received. Prices received was down from 31.8 to 31.4. So that was good news. What wasn't good news was that it does seem like things were starting to take their toll on the economy. We'd seen very strong readings out of the Empire State Manufacturing Survey and then the corresponding ISM National Manufacturing Survey over the last couple of months. But the month of June so far has been a little bit softer, with general business conditions falling from 19.6 to 5.7 and new orders slipping from 22.7 to just 3.5. So I do think that, and this is something that we've been talking about, that the war had been taking its toll on the economy, and it had been this build, as well as that initial push and pull forward ahead of the World Cup was largely playing out. But I think as it relates to the news that we got over the weekend, I think that's going to help prices continue to come down and stabilize maybe some rockiness that was starting to build in the underlying economy. Overseas, Keir Starmer, the Prime Minister of the UK, is banning social media use for the kids under the age of 16 years old. There will be some exemptions for things like YouTube Kids and Google Classroom. He says, I'm not prepared to compromise on the safety and happiness of our children. This is why this ban must happen. It's going to be signed by the end of the year, and it's going to be implemented by the spring of 2027. He says that these things are designed to be addictive, and that infinite scroll stops children doing their homework, reading, playing with friends outside, and going to bed at a decent time. None of which I necessarily disagree with. None of which I think that, kids shouldn't be protected from a lot of these things. I'm curious to hear your thoughts, though, Tom, as how it relates to free market and where the government should impress its authority.
I mean, I think it's a double-edged sword. I'm obviously a pro-freedom guy. Never won't be. Always will be. That's my right as a free person. But, yeah, I don't know. I think it's more in line with the idea that they don't want people seeing what's going on in England. I mean, obviously I've been pretty plugged in on this because it's something that interests me, but there's been massive riots in Northern Ireland around a man who was basically there was an attempted beheading in the streets of Belfast in the middle of the afternoon. I'm not going to say necessarily what I think the reasons for that were, but there are some people who like to behead people, and there are some that don't. But, that's a pretty wild place to do it. You're seeing Catholics and Protestants join hands against people in Northern Ireland, and I think that it's in line with what you're seeing in the UK. Is they don't want people seeing or being influenced by that, and they definitely don't want young people being influenced by that. And so if they can control what goes into the kids' media on YouTube, they can start to mold hearts and minds in a particular way that they can throttle and not have them be able to see the entire scope. I mean, it's not unlike, Twitter pre-Elon where, they basically said you can't have XYZ on here. We'll take you off. We'll, throttle that content. And so only the content that we want you to see will be seen. I think that's basically the move here. But then, on the flip side, I don't think it's good for kids. I don't think you should necessarily have your kids doom scrolling on there, but and that's a parenting thing. Well, that's your freedom as a parent to say what your kids can and can't do.
And especially with devices now, you can block a lot of apps or websites or things like that and have total control over that. And so, yeah, I think it's a little bit of an abdication of responsibility from the parents. I mean, if you want to, have a recommendation that, hey, these things are not good for kids' brains and development, provide that recommendation and provide ways that parents can implement those things. But mandates and laws like that it's a slippery slope.
I mean, I think there's far more things on the internet that need to be throttled for the young people that, you or you might have, but I certainly didn't have access to because the internet was slow and streaming video didn't really exist until I was in college. But I think that's warping people's brains far more than social media.
Mm-hmm.
This is a family podcast, so I'll let you guess what I'm talking about. But, back in the day, you had to go to weird, seedy stores on Cobb Parkway and, on your 18th birthday just to see what's up, But now, you can be 12 years old and open your phone and see anything. And that's not on social media. So I'll leave it at that.
All right. Speaking of streaming media, Fox is buying Roku for $22 billion. I think this was kind of leaking out on Friday. The stock had already risen from 120 to 143. The deal price is going to be done at 160. Fox has already secured $12 billion of funding from Morgan Stanley for the deal. Roku, I wasn't too familiar with the business. I know it's there and they have the streaming platform. I always think that they just have they basically buy the real estate by, having the Roku-enabled Vizio TVs or whatever you have. And I'm sure they pay Vizio for that. And but essentially, Roku makes money from the advertising of other apps on that platform and distributing streaming services. So it's a little bit more like a razor blade model. I think it's like only 5% or 10% of their revenue actually comes from selling the Roku devices. But Fox is going to buy them and presumably have a little bit more control over the whole streaming platform and an avenue into the living rooms and everything. And I think the deal makes sense. At $22 billion, it seems expensive because I do wonder if Roku is here for the long term. They have 100 million users right now, but I don't know if that means a whole lot. It does get you wondering, though. I mean, if Roku as a business, which doesn't sell many devices, is worth $22 billion, what is the Apple TV business alone worth, which also is a distribution channel and advertising and all that?
And F1 contracts.
Mm-hmm.
I mean, I don't understand this one at all, honestly. When prior to people really cutting the cord, I haven't had cable in a decade, maybe longer, and I bought a Roku stick, probably back in 2011, 2012, so that I could watch Hulu or watch Netflix, and that was really my first introduction to it. But I haven't really touched it since then because now all the TVs have it loaded in, or you can get an Amazon Prime Fire Stick, which is the same thing, and to my knowledge, they don't produce their own content. So what is the business? They're basically something. It's kind of like, why would you buy a digital camera when you've got one on your phone? I don't quite understand the business. And obviously we don't own it. It's not a stock we talk about much. It's only worth $22 billion, and it wasn't 3 weeks ago. So I don't really know. I don't know what the upside is here, other than it's just continual, companies ruining themselves on the battlefield that is the streaming wars. So I don't love it, but we don't own Fox. We don't own Roku.
I mean, it really is trench warfare.
Yeah.
Like that no one wins, and I feel like you just lose tons and tons and tons of money.
I'll tell you who loses: sports fans. Yeah. Trying to find sports. I didn't even realize that the UFC fights were last night. I knew they were coming up, but one, I have children, and UFC fights almost always take place at 2 a.m, which was something I had time for, 5-6 years ago, but I don't anymore. And so my watching and knowledge of the UFC has dropped to virtually zero. But I guess it was only on Paramount Plus, and I don't have a Paramount Plus.
I don't know anyone.
But like to your point, Apple TV, you can watch F1. Baseball is all over the place. Football is now all over the place. It's just become.
I've canceled everything.
Yeah.
By the way, I canceled my Fubo. I've canceled absolutely everything. I have right now a 3-month trial for the cost of 2 months for Fox One for the World Cup, and I think that's it.
Thank goodness the golf stage continues to be on CBS, because you can just get it with that with rabbit ears. But you can also watch it's like the DraftKings main feed starting at 7 a.m. on ESPN Plus, and then it transitions to Golf Network for an hour, and then it goes to CBS. If you want to watch it all day, again, you've got 3 different modalities to get there. It's just a whole. Yeah. But like the majors, you can just watch on the internet. You can watch the Masters on the internet. You can watch all of the the Open and all that stuff. Are all going to be. You can stream that Wednesday, Thursday, just at your workstation. Not that I would know, but that's all I have to say about that.
All right, Tom, you're flying off. When do you get back?
Wednesday night, so I'll be back for the Thursday call.
Thursday, and no call on Friday. Markets are closed on Friday for Juneteenth. Also, U.S. plays at, and a lot of people aren't going to like this, but U.S. does play at 3 p.m. on Friday in a game against Australia. So got that going for us, which is nice. See you tomorrow. Bye.